The Department for Work and Pensions has officially confirmed the winter fuel payment rates for the upcoming winter season. And for pensioners across the United Kingdom, this is a crucial update that could directly affect your comfort, your budget, and even your health over the coming colder months. As we approach the darker half of the year, every penny counts, especially when it comes to heating your home. For many households, these months bring higher energy bills and greater concern over rising costs. That's why understanding exactly how much you're entitled to when you'll receive it and how to ensure nothing gets missed is more important than ever. If you're a pensioner or nearing state pension age, you need to hear what's changing, what's staying the same, and how it will impact you and your household. This year's announcement confirms that the government is once again stepping in to provide support during the colder months, but the rules around eligibility and payment amounts are different enough that even those who received the payment in previous years should double-check how the changes apply to them this time. So, what exactly is the winter fuel payment? It's a tax-free annual payment made by the UK government to help older people cover the cost of heating their homes during the winter. It's not means-tested in the traditional sense, but there is now an income threshold that can affect whether or not the payment is clawed back through your tax code. The aim is to offer relief at a time when heating bills can be highest, particularly for those living on a fixed income like the state pension. In most cases, you don't need to apply for it. The payment is made automatically if you're eligible, but knowing exactly when and how that happens can make a big difference, especially if you're budgeting ahead. The payment is separate from cold weather payments or the warm home discount scheme, and you can receive all three if eligible. For this winter, the payment is expected to be between £200 and £300, depending on your age and your household circumstances. It's a one-off annual payment, but for many people, it provides just enough breathing room to keep the heating on a little longer each day, or avoid dipping into savings or credit to manage their bills. Now, when it comes to eligibility, the key requirement is that you must have reached state pension age by the qualifying week that's the week running from the 15th to the 21st of September, 2025. You also need to have been living in the United Kingdom during that time, specifically in England or Wales for these rules. The regulations in Scotland and Northern Ireland may differ slightly, but in most cases, residency in the UK during that specific week is the defining factor. What's particularly important this year is that the income rules have been adjusted. Previously, the payment was sometimes restricted based on whether you were receiving pension credit or other low-income benefits. However, that has now changed. Pensioners with a taxable income of up to £35,000 per year will still be eligible for the full payment. Those who earn above that threshold may still receive the payment initially, but it could later be recovered through taxation, either via PAYE for those still working part-time or through self-assessment for the self-employed or individuals with complex tax arrangements. This income threshold is based on individual earnings, not household income. That means if you live with a partner and one of you earns more than £35,000, while the other earns less, the tax recovery will only apply to the individual who exceeded the limit. This update has been introduced to ensure fairness while still targeting support to those who most need it. For many, this won't change a thing. But for those who have some additional income from private pensions, part-time work or investments, it's something to be aware of. Now, let's talk numbers. If you were born before the 25th of September, 1945, and you live alone or with someone who isn't eligible, you'll receive £300. If you were born after that date, but still meet the qualifying age, you'll receive £200. If you live with someone else who also qualifies, the payment may be split between you, for example, £100 each in some cases, or a larger share depending on who is over 80. It can get complicated quickly, especially in mixed-age households. but the total benefit going into the home is generally the same or higher compared to previous years. Let's bring this into reality with a few examples. Take Mr. and Mrs. Taylor, both retired and living in Kent. Mr. Taylor is 81. Mrs. Taylor is 78. They've been receiving the state pension for a few years and have no private income. Because Mr. Taylor is over 80, the household qualifies for the full £300, which may be split depending on how their pensions are paid. That's money they'll likely receive automatically before Christmas, and they've already planned to put it toward their gas bill, which has been steadily climbing over the past year. Then there's Linda, a 74-year-old widow in Manchester. She lives alone and receives just the state pension and a small annuity. She's under the income threshold and qualifies for the £200 payment. For her, that could mean the difference between keeping the heating on in the evening or cutting back and facing a cold flat. On the other hand, George, age 76, who still does part-time consulting work and earns about £42,000 a year, will still get the winter fuel payment initially, but he knows it'll be recovered through his tax code the following year. He's fine with that, but it's important that he budgets accordingly and doesn't see it as extra income. The payments will start being made from mid-November 2025. Most pensioners will receive theirs by the end of December. If you don't receive yours by the end of January 2026, that's the point where you should get in touch with the Winter Fuel Payment Center. It's also a good idea to make sure your bank details are up to date, especially if you've recently changed accounts or moved. The payment is made into the same account as your state pension, so if that's changed, the DWP needs to be informed in advance. Letters confirming your payment should start arriving in October or early November, so keep an eye out. They will tell you how much you're getting and when to expect it. If you receive your state pension but do not get a letter or a payment, you should take action sooner rather than later. Sometimes errors occur, especially for those with more complex living arrangements or recent changes in their pension status. It's also worth noting that if you live in a care home and have been there continuously throughout the qualifying week and are receiving certain income-related benefits, you may not qualify for the payment. Similarly, if you are hospitalized for a long-term period during that time, there may be implications. It's not a blanket payment for every pensioner. It's targeted based on where you live, your income level, and specific living arrangements during the qualifying week. One concern we hear often is the issue of scams. Every winter, fraudsters take advantage of uncertainty around government payments. They send texts, emails, or phone calls claiming you need to apply now or confirm your bank details to receive the winter fuel payment. This is false. In almost every case, if you're eligible, the payment is automatic and requires no additional action. The government will never ask for your bank details over text or email. If you receive such a message, delete it, block the sender, and report it if possible. Staying alert could prevent a financial headache at a time when you're already watching every pound. If you've just reached state pension age this year, make sure you check whether your first payment will include the winter fuel payment. Those newly eligible might need to wait until they've received their first state pension payment before they can confirm eligibility. If you moved to the UK recently or returned after living abroad, your residency during the qualifying week will be crucial. And if you're caring for someone else who receives the state pension but might not be aware of these changes, maybe an elderly parent, a neighbor, or someone in your community, now is the time to help them check their information. A 5-minute check today could mean a £200 or £300 difference in their winter budget. For some, that could be a week's worth of heating or a much-needed top-up to their electricity meter. The winter fuel payment may not solve the broader issue of energy prices, but it can provide short-term relief, and knowing that it's coming and planning for how best to use it can make a real difference. If you're watching this and you're under 55, perhaps caring for an older loved one, or starting to plan your own retirement, it's also worth understanding how these systems work. These types of seasonal benefits might seem small, but they are part of a broader picture of how retirement in the UK is structured. As the cost of living continues to fluctuate and energy prices remain unpredictable, every support mechanism matters. By staying informed, you can make the most of what's available and help others do the same. If this update has helped clarify what to expect from the winter fuel payment this year, do consider liking this video and subscribing. This helps ensure you continue to get straightforward, no-nonsense updates about the things that affect you most. There's no fluff here, just practical information to help you stay ahead. The winter fuel.